When that market dries up, that's when the paper markets start to have a serious problem. And then you would likely to see a scenario of where, in terms of like we've seen with Palladium, where the shortage of physical prove this. And it's only scalable. Okay, it's a small market for Palladium, but it doesn't matter. It has the same effect. And that's where I've always said you will see the rise in silver and gold.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Today is the second part of my interview with London Paul. And in this section, asked him about the gold and silver markets, which obviously he follows closely, whether in China or London or what's happening here in the US, and was curious what he thought about what's happening in palladium and rhodium, where the prices of those two metals has really been skyrocketing lately, and whether he thinks that will happen in gold and silver. So here's what he had to say. Although one of the things you mentioned was gold and silver, which I know you talk a lot about on your podcast, the Sirius Report, which, by the way, I'll mention the link is in the description page, folks. So if you would like to hear more detail about that, Paul keeps us posted 5 podcasts a week. And a few factors in the precious metals markets. It seems to me like the last, pin holding this whole thing together. Now we're seeing palladium and rhodium. I've invented the term, instead of going vertical or going exponential, I like saying they're going Tesla now.
Yes, very good analogy.
Yeah, and I mean, so far, in the last day or two, we had a little movement in gold and silver, but not quite to that same effect. Some of the folks I've talked to raise a good argument, which I could buy into, that perhaps once palladium or rhodium, if they really continue to accelerate like this, could that spill over into gold and silver? And perhaps people notice that handing your gold and silver to SLV, where the custodian is JP Morgan, who's currently being charged with the RICO Act for their involvement. So would love to hear any thoughts you have on the precious metals markets.
Yeah, okay. I think palladium's is interesting because, we've seen this enormous spike in the price. And what underpins all this is the shortage of physical. Yeah, in reality, as a futures market, it's dwarfed by gold and silver. But I think it's an interesting precedent, and it follows what I've said for more years than I care to remember. I'm one of probably the only few people who've always said the gold and silver price will never move. I know there's a lot of people who want to believe in TA, and that's fine, or there's people who believe that if we reach a certain price, then there's going to be this breakout. And I've always said no, and my rationale behind that is based what we're seeing in the palladium market. Eventually, in the West, you're going to see a shortage of physical metal. And that's always the basis when I think you'll see a proper breakout in price. And until then, it'll just play around because the paper market can dictate the price. But when I say a physical shortage, I don't mean you can't buy 100 ounces of silver from your bullion dealer or 5 ounces of gold or something like that. My basis for this is the opaque markets. Now, everyone quotes all these statistics about this much, gold heading east, or this much gold being sold out of London or wherever it might be. Well, that's fine, but that is not where the real movement is. The opaque markets are never registered anywhere in terms of statistics, and that's where the enormous amounts of gold go. And it's the old price of gold is not the gold price in those markets. And when that market dries up, that's when the paper markets start to have a serious problem. And then you would likely to see a scenario of where, in terms of like we've seen with Palladium, where the shortage of physical prove this. And it's only scalable. Okay, it's a small market for Palladium, but it doesn't matter. It has the same effect. And that's where I've always said you will see the rise in silver and gold. Now, I mentioned the opaque markets because they are very specialized. There's very few people. And literally, when I say very few people, there's less than a handful of people in the world involved in that. And I know someone who's involved in it. So I know the opaque markets. That's why I've always said you won't see major price movement. And for me, major price movement will be when gold gets towards 2000 or silver gets over 50, when we're into utterly uncharted waters. That doesn't mean subsequent price rises won't happen, but the question is, what can cause a fracture in the paper markets? Well, it's not entirely related to people acquiring physical metal directly. There can be situations where, for example, in the US Treasury market, or when we have negative interest rates, as we do in Europe, that can cause a run on bullion. Now, we saw the price rise yesterday in quite significantly for no apparent reason in gold and silver. That was caused because of huge dislocations inside the Treasury market at the short end. And that led to a run on bullion. Now, this can be another reason why it will cause this dramatic flow of metal out of from maybe west to east or wherever it's going. But that could be enough where, therefore, the paper markets come under serious stress. So there are a number of factors, but ultimately, it's when there's a run on bullion, and then, therefore, the paper market can no longer be suppressed. And then we see the Palladium scenario playing out. And when that happens, I don't know. I will look for indications. I know certainly in the opaque markets that if you want a ton of gold now, it costs you a pretty premium. Their markets are tight. It doesn't mean they're absolutely, if you want a ton of gold, you're not going to get it. But they're not as free and easy as they were 2, 3, 4 years ago. And to put this in context in terms of the opaque markets, for a 2.5-year period, 1,000 tons of gold went from west to east every month. Well, just that's 30,000 tons. So a lot of people say to me, China can't have 40,000 tons of gold. Well, here's the question. How many years do people think they've been producing 600 metric tons of gold a year? They don't tell the West about, and it never leaves China. Well, if they've been doing that for 20 years or 30 years, there's 12, 18,000 tons alone. I know for a fact all this gold headed west to east. It doesn't mean it all went to China necessarily, but a huge amount did. China has massive more higher gold reserves than they admit, because ultimately their goal is to back their currency with gold. Russia has enormous gold reserves. Iran has enormous gold reserves, which is not well understood or known. And the reason everybody there's all these central banks around the world buying gold is because they know what's coming. So don't be deceived by the fact that China says, officially goes, we've got about 2,000 odd tons of gold. This is nonsense. They don't care whether the world believes they've got gold or not. Because
that
whilst
number
they can
seems hard to believe.
Well, no, it's impossible. I mean, because we know they produce 600 metric tons a year themselves. And it may even be higher than that. That's what I know to be the case, but it could be higher. So the clear indication is they have massive more gold reserves than they admit to. And the other thing is, of course, whilst they can acquire cheaper gold in relative terms, they're quite happy. They don't care whether the gold price is, when the gold price needs to be higher, it'll be higher. And when people say China can't back their currency with gold, they fail to understand one important thing. China can reset the gold price to whatever it likes to back its currency with gold. They can arbitrarily say, well, as of today, gold's going to be priced at this. And they can, because they have a mature gold market to do that. And that's precisely what they will do at some point in time. And therefore, they can back their currency. So, and then when people say we're not going to have a gold standard, and they make all the excuses about, well, gold's heavy and it's cumbersome and awkward. Well, it depends how you back your currency. It depends what your intention is. And for example, if you want to have your trade imbalance settled in gold, the other point is you don't necessarily have to even ship the gold from country to country. It can just be segregated in an existing country, or if the discrepancy is a ton or two, it's nothing. You can ship 10 tons of gold very easily, but people who don't have any visibility of the market make all these assumptions. But that is exactly where we're going to. And we've spoke before about asset-backed cryptocurrencies, and people said to me it will never happen. Well, China and Russia have telegraphed that's precisely what they're going to do. And the West is suddenly panicking now that they think China could take control of international markets by doing this without realizing. Of course, that's not China's intention, but there's panic inside the Fed now who suddenly think we need to have our own digital currency as a result of this. So, as ever, the market will move when it moves. Eventually, there's going to be a point where something will break, and we know there's many thousand spinning plate theory I use that something can break, and we can talk about repos and QE and all that stuff shortly. But yes, it will break. At some point, silver and gold will start to get to a point where we get some form of price discovery, but it's not going to happen because suddenly we magically break through some resistance that TA says is applicable, because history proved it's irrelevant. And I've spent 7 years making this statement, and I haven't been wrong yet. So at some point, you have to, whether you agree with me or grudgingly have to agree, that I must be onto something to have been correct all this time. But if I mean, it's public knowledge. I'm a strong silver and gold advocate, and I do see a significant re-rating in the price in the future. But when, I don't have a crystal ball, but I will look for indications where the opaque market does dry up, or we see some dislocation somewhere in the markets, which would lead to a massive run on bullion. Because let's be honest, at some point, whether people are gold bugs, as people like to call them, or not, there's going to come a situation where the rush for gold is going to be enormous. And whether there's any gold available at that time in any quantity is an entirely different matter. So there's an inevitability that some event could lead to a rush and a desire to, which could exhaust what's available in the West as well. And it may not necessarily go into Eastern hands. It could go into what you might call very secure hands in the West. You mentioned about the DOJ investigation with JP Morgan. I don't see anything. We've heard all this before, and then someone gets their wrist slapped, and there might be some token fine. And really, I don't care whether they prosecute JP Morgan if they've done something wrong or not. I mean, that for me is not indicative of anything. The indication is when the source of the problem, and I see JP Morgan, if they are guilty of things, they're just a conduit for something else. It's rather like blaming the Fed for everything when the Fed isn't the problem in the US. It's the US Treasury and principally the Exchange Stabilization Fund. So if you want to deal with the real root cause of the problem in the gold and silver markets, then get to the root cause. But it makes great headlines and it looks as though something may happen. And I think ultimately at some point there's going to be huge changes, and no doubt there'll be huge changes in the gold and silver market. But ultimately, of course, China already has the remedy, because if you buy an ounce of gold on the Shanghai Gold Exchange, or you buy a contract, it's backed by a physical ounce, definitively. So they already have the market that actually works. So that could arguably be the benchmark for what should happen in the West, where we don't have who knows how many 100 ounces of paper in relation to 1 ounce of physical. And that's open to debate as well, because like anything, I don't necessarily trust any statistics that come out of any Western institution anymore. And I think that sort of cynicism is unfortunately being borne out throughout recent history, and particularly in the last decade or so. So yeah, I remain confident. I see a very strong future for precious metals in a very much changed world. But with regards to the US itself, there's people think the US has got 8,000 tons of gold, and my argument is, well, let's have an audit then and prove it. Because when was the last time US gold was properly audited? Was it 1953? Call me cynical, but I don't trust that the US has got 8,000 tons. And people who I know have said to me, the US has no gold. And you know what? It wouldn't surprise me if they barely had, I don't know, a ton or two, and that's the limit. And because undoubtedly the question would be is why, when people wanted their gold repatriated, like the Germans, did it take them so long to give their gold back? I mean, if you've got the gold segregated, you can ship it all immediately, but there was all these excuses made. So there's a clear precedent that suggests the US doesn't have the gold that they say they do. And I'm not going to get involved in conspiracy theories, but people who think that the US is going to back the dollar with gold, and even if they could, here's the problem. They've got a massive trade deficit. Well, that gold's going to disappear very quickly. And to put this in context, at one point, the US had 20,000 tons of gold. By the time they came off the gold standard, they were down to 8,000. Well, what do they think is going to happen if you put the US back on a gold standard? It would, even if they had the gold, it's going to disappear very quickly with the enormous trade deficit that the US currently has. Okay, we can argue about how quickly the US can flip that over. That's not going to happen overnight. It's going to take years for them to rotate their economy, et cetera, et cetera. But that's a whole separate subject in of itself.
Yeah, well, a lot of great points you mentioned there. And speaking about the Fort Knox, there's a researcher from the Netherlands named Jan Nieuwenhuis who has reported that the seals on Fort Knox have been broken, which apparently the seal is there to show that no one's gone in. And he says the seals have been broken. He also reported that there have been 12 partial audits. Let's say calling it an audit, no one knows who did the assay or anything like that. But what I found interesting was that of these 12, and calling it an audit is being generous, I would say, he actually reported that the U.S. Treasury has lost. They lost 7 of the 12 audits, I guess similar to how the Pentagon lost $2.1 trillion on September 10th. And so I think you raised some good points there. And I'll bet someone announced a gold that we don't have what they say in there. So that was London Paul of the Sirius Report, who, as you can see, digs quite a lot into the gold and silver markets. And if you enjoyed that clip, then just press the box that's about to appear, and you'll find out whether he thinks we're headed towards a binary outcome of whether gold and silver rise slowly or if there's going to be a big move at some point.